Step through the heavy velvet curtains. Take your designated seat in the absolute front row and keep your eyes entirely fixed on the center of the stage, because the greatest illusion in the history of financial theater is currently being performed right in front of you. Welcome to the grand spectacle, ladies and gentlemen. The massive marquee outside, flashing in neon, reads, "Breaking XRP traders, spot a major setup. Big move expected soon." But I absolutely promise you, the vast majority of the audience is staring at the completely wrong hand. In the masterful art of grand illusion, the single most critical element is misdirection. The magician must force you to focus entirely on a flashy, terrifying distraction, so that you do not see the actual mechanical gears of the trick shifting right beneath the floorboards. Right now, the global market makers are performing an absolute masterclass in macroeconomic misdirection. They are aggressively pointing your attention to the spot price hovering around $1.39. They are conjuring up terrifying macroeconomic storm clouds, utilizing the perpetual futures markets to fabricate a dense, suffocating smokescreen of artificial sell pressure. They want the retail audience to feel absolute dread, to believe that the regulatory momentum has vanished into thin air, and to frantically rush for the theater exits. When you look at the red candlestick charts and feel that sickening drop in your stomach, you are successfully falling for the illusion. But if you peer behind the heavy velvet curtain, a completely different reality reveals itself. While the public is paralyzed by the manufactured fear of a never-ending bear market, the sovereign institutional whales are executing the setup. The major setup is not a technical pattern on a 15-minute chart. It is a meticulously coordinated, multi-billion-dollar physical accumulation phase occurring completely out of the public spotlight. The smart money is absorbing the sheer panic of the retail sector, systematically scooping up every single discarded token that the terrified audience leaves behind. The moment you surrender your cryptographic assets out of sheer emotional exhaustion, you have allowed the magician to successfully pick your pocket in broad daylight. The big move that is expected soon is the final act, the prestige, where the artificial suppression is violently lifted and the true mathematical value of the network is instantly revealed to a completely empty theater. You must learn to see through the smoke and mirrors. Do not let the engineered volatility break your absolute focus. The stage is perfectly set, the trapdoors are primed, and the greatest wealth transfer in modern history is actively happening behind the scenes. Keep your eyes wide open. Let us examine the intricate trapdoors built directly into the stage, because understanding the hidden architecture is the only way to survive the performance without losing your capital. The mainstream financial critics sitting in the upper balcony are currently publishing reviews claiming that institutional capital has completely abandoned the cryptocurrency sector due to rising geopolitical tensions. That is a perfectly scripted lie designed to maintain the illusion. If we bypass the public theatrical reviews and inspect the raw ledger data of the United States Spot Exchange traded funds, the true mechanics of the trick are blindingly exposed. The heavyweight financial titans commanding these heavily regulated investment vehicles, entities like Bitwise, Canary, and Franklin Templeton, have quietly accumulated a staggering stockpile of over $1.3 billion in physical cryptographic assets. How does a magician make $1 billion of concentrated buying power enter the arena without instantly blowing the roof off the spot price? The answer lies in the highly secretive, unregulated trapdoors known as over-the-counter dark pools. These massive asset managers are not walking out onto the brightly lit public stage to execute their billion-dollar acquisition orders, because doing so would instantly trigger a massive price explosion and completely ruin their covert accumulation routine. Instead, they are utilizing hidden liquidity providers to systematically absorb the discarded tokens of every panicked retail spectator who folds under the psychological pressure. To perfectly camouflage this massive resource grab, those same liquidity entities aggressively short the public futures markets. By driving the open interest into the negative, they manufacture a highly convincing illusion of a brutal, unending collapse. The civilian sector looks at those metrics and assumes the asset is actively dying, while the institutional cartels are literally backing up armored trucks to secure the floating supply at a steep wholesale discount. Furthermore, you must synthesize this dark pool illusion with the explosive scaling of the RLUSD stablecoin infrastructure. The RLUSD network capitalization has aggressively expanded past the $1.5 billion threshold. The legacy banking syndicates are hardwiring their cross-border liquidity operations directly into the Ripple framework. The mechanical burn rate is actively accelerating on a massive global scale. Every single time a multinational corporation executes a cross-border transaction utilizing RLUSD, a fraction of the native XRP token is systematically incinerated by the network code. They are silently hoarding the physical float while the network simultaneously burns the remaining reserves. This is the exact cryptographic formula for an unprecedented violent supply shock. The illusion is mathematically flawless. We must now cast our gaze across the international theater, because the momentum triggering this massive market setup originates far beyond the domestic borders of the United States. A master illusionist understands that true, systemic deception must be executed on a global, synchronized scale. While the civilian sector is completely mesmerized by the minor parlor tricks on their mobile trading applications, our international observers have intercepted critical contracts from the highest echelons of European and Asian financial empires. Weeks ago, we confirmed the highly classified integration of Ripple Prime into the National Securities Clearing Corporation directory under the undisputed heavyweight champion of Wall Street, the Depository Trust and Clearing Corporation. That precise tactical maneuver effectively hardwired the decentralized ledger directly into the absolute beating heart of the American traditional equity settlement machinery. But the new intelligence that confirms the massive building momentum is an unprecedented European convergence. We have empirically verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MiCA-compliant Euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP, when trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational machinery to settle corporate bonds and stablecoin transfers. It mathematically guarantees a tidal wave of future utility volume. The sudden momentum spikes are the market algorithms violently attempting to price in this massive international adoption before the retail sector realizes the performance has already been rigged in the institution's favor. The legacy financial system is actively crumbling, collapsing under the unsustainable weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic fortifications on a global scale. The corporate media is actively deploying psychological countermeasures, broadcasting terrifying macroeconomic narratives to keep the public completely paralyzed by fear. They want the civilian traders to abandon their seats during these brief moments of volatility so the sovereign cartels can monopolize the ultimate global settlement empire. Trust the raw intelligence of the hidden ledgers over the deceptive lights of the stage. The momentum is absolute. The contracts are signed, and the international heavyweights have taken their positions. The grand finale is rapidly approaching, and the retail audience is completely unprepared for the revelation. Prepare to execute your final maneuver before the heavy curtain falls, because recognizing the sovereign manipulation and the structural hustle behind this major setup is absolutely useless without a highly regimented strategy for cashing out your chips. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD stablecoin engine, the massive DTCC systemic integration, and the colossal international banking deployments. So, what is the ultimate mathematical destination of this digital asset when the algorithmic illusion is permanently shattered and the prestige is finally revealed? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative odds makers at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific geopolitical cycle. To the uninitiated civilian spectator, currently psychologically traumatized by months of artificial suppression, an $8 projection sounds like an impossible fairy tale pushed by a desperate performer. But to the elite observer, who understands the absolute certainty of a violently constricting supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative operational waypoint. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed and panic are the ultimate vulnerabilities in any theater of deception. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure stress-free profit. The secondary operational tranche is programmed to ride the algorithmic volatility toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation from the legacy fiat hustle. The final tertiary portion must be securely encrypted and locked in your deepest cold storage vault for the ultimate long-term macro play. Secure your private cryptographic keys offline immediately using hardware authentication. Thieves are prowling the aisles, while the audience is distracted by the flashy lights. Execute your cash out flawlessly, beat the illusionist at his own game, and walk away a champion before the theater goes entirely dark.